Hello and welcome to another daily market update by Market Intel. Today we want to take a look at a stocks chart that I think we can't remember we've ever looked at it. So always good to try something new to see if you're interested in stocks charts as well. So it's the Texas Instruments chart, a chart that's currently in a correction. It's arrived at a key spot. We want to take a look at it, want to check, are there any opportunities? So let's take a look at the chart. Let's go. So we are on our website, dailymarketupdate.com. If you're interested in receiving more updates, also completely free of charge, you can register on our website by using the link in the video description. For example, you get access to cryptos, tech stocks, and so on. So today we want to take a look at our tech stocks section indeed. So we'll click on it and the Texas Instruments chart is here for us. It's the long-term outlook I want to share with you today. Let us hide the text. By the way, if you're registered here on the website, you will get these additional updates in writing, usually also including probabilities. Like here on the Texas Instruments chart, you see the probabilities that we're assigning for example, for a direct breakout and so on. I think this one could be one maybe for the watch list because this is one of the charts that seems to be in a fairly stable uptrend, a pretty clean impulse to the upside that might be developing there at the moment. As you can see, this is the long-term chart, but I know a lot of the viewers here are interested in long-term investments, in larger time frame charts as well. So when we have a stocks chart available that we haven't really covered before, and where we have a long-term chart available with pretty clean outlook, then I think it makes sense to share it. Also, I think we are currently at a key spot here, and I want to share with you why. So first of all, as you might know, when if you've been following our channel for a while, then you probably know that an Elliott wave structure, a trending structure, is typically a 5-wave pattern. And you can see that we are likely here working our way higher in a 5-wave pattern at the moment in this blue wave 1. And we have likely completed an internal third wave in 2021, and we're now in this wave 4 correction. And the preferred interpretation, and we assign a 65% probability for that one, preferred interpretation is that we could spend some time in this range here, but it would likely be a 4th wave. And the current assumption is we shouldn't see the market break below $99.78, ideally not even below $107.75. And once this wave 4 is over, a 5th wave rally to potentially $300 plus should occur. Why do I say we're at a key spot? Because it seems like we are close to completing this A wave low, or have already completed it. Would start either a B wave bounce from here that could take us even towards the $250 area. Don't have to get there, but closer to it. Yeah, sometimes these B waves do overshoot, but because B waves overshoot, there's normally kind of a threshold. So when a B wave breaks above a certain level, it's a Fibonacci retracement level. In this case, it would be the $240.67 level. Then it becomes more likely that we're already in the 5th wave. So we assign currently a 35% likelihood to that scenario. Could really be that we are already in that 5th wave, but we would need to see some evidence. So either way, a bounce would be expected over the coming weeks, months, maybe even years. The market could work on that B wave. I mean, if you consider that the A wave really, I mean, it took several years, right? So that B wave could be a decent move. Now, I'm not sharing this because I find it a very, very attractive setup at the moment, but overall, there is a trading area here with $107.75 as a key level. So ideally, we don't want the market to break below it. It's not guaranteed to get there. Yeah, the market has already undergone quite a substantial correction, especially if you consider the depth of the decline in this wave 2, which finished around 2002, 2003. The wave 4 is already quite substantial. Now, we haven't really seen any impulsive movement from the lows, from the recent lows, but as I said, it's entirely possible we are already in the 5th wave. So I think it is important to understand the invalidation point is at $99.78, and it should get to $300 plus. Yeah. So any larger correction could be a really good, offer a really good reward to risk ratio. Until then, I would see that here as a range with the potential for an upside breakout. But either way, our expectations are for higher prices, potentially after a more extended wave 4, but long term, an interesting chart that I thought you might be interested in because we haven't really talked about it before. So yeah, hopefully you liked the update about Texas Instruments. If you did, please hit the like button, leave a comment and subscribe. Yeah, and if you're interested in additional updates, tech stocks, US stocks, cryptos, then make sure that you register on our website. Also, let me know if you're interested in certain stocks or other cryptocurrencies that you want me to cover in future videos. Thank you very much. Bye-bye.